Committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. This hearing is entitled Examining De-Risking and Its Effects on Access to Financial Services. Before we begin today, I'd like to thank the witnesses for appearing. We appreciate your participation and look forward to the discussion. I know that this is the second hearing in 2 days for this committee, which is a little unusual, but I appreciate all the participation, and we'll get a few more members here shortly. It's a little early. A lot of other activities going on this morning, so bear with us, and thank the committee members for their participation. I now recognize myself for 5 minutes for the purpose of delivering an opening statement. In 2012, a group of industry leaders came to me to tell me that they had lost access to financial services overnight. Their long-standing bank accounts were closed. These men and women didn't bank with the same institution. They weren't from the same part of the country, and there was no evidence that they were participating in an illegal activity. However, they were all part of the same business, a business that was unsavory to Washington bureaucrats. This was the beginning of Operation Choke Point, a joint initiative between the Department of Justice and the FDIC to choke off certain businesses from the financial services they needed to survive, not based on wrongdoing, but on political motivation. Operation Choke Point had a chilling effect on financial institutions and their customers. What started as an effort to push non-deposit lenders out of the banking system has metastasized. This larger, more aggressive trend of de-risking has spread to other regulatory agencies, financial institutions, and industries. Like many of my colleagues, I've heard too many people who have lost access to financial services. Accounts have been terminated for a money servicing business in Cincinnati. It was a payday lender from St. Louis, an ATM operator from the suburbs of Phoenix, and amusement gaming operators in Oregon and California. The trend has hit pawnbrokers in Dallas, San Diego, Oklahoma City, from Rhode Island to Colorado, and nearly every state in between. Across the financial spectrum, this dangerous trend of de-risking is alive and well. Most likely, it's a result of increased exam pressure and compliance costs. The banks and credit unions are continuing to close accounts of long-standing customers, in some cases even disclosing in writing that the regulatory pressure was simply too intense and the hurdles too insurmountable. These issues beg some very serious questions. Where do these businesses go when pushed out of the U.S. financial system? What are the implications for law enforcement? Does this attempt to de-risk actually create more significant risks for law enforcement, financial stability, and consumer protection? The reality is that removing risk from the system actually creates a problematic environment where entire industries that were once part of a highly regulated system are pushed into the shadows. This is a conversation we've had in the BSA AML space. We need to ensure that there are processes and procedures in place so that we can guard against fraud and criminal activity in a meaningful way without imposing unnecessary and unproductive burdens on institutions. This is not a partisan issue and one that should sound alarms for all of my colleagues. Working together, this committee secured passage of H.R. 2706, my Financial Institutions Consumer Protection Act, which would help curb de-risking by requiring federal banking agencies to establish a transparent process by which account termination requests and orders must be made. However, we must continue to shine light on this issue so that we understand why de-risking is continuing and the implications it has on our economy, both at home and abroad. We have an excellent slate of witnesses today. We thank you for appearing and look forward to your testimony. The chair now recognizes the gentleman from Georgia for the purpose of delivering an opening statement. Mr. Scott.
Thank you very much, Mr. Chairman. This is indeed, as you've said, a very important hearing. A part of what we must do is what I refer to as we've got to shine a light out of the darkness here. You can over-regulate, and when you over-regulate, there's a trickle-down effect and unintended consequences, and you wind up hurting the very people you're trying to help. And nowhere is that more significant in what you're trying to do with our choke point legislation, H.R. 2706, which I commend you on working with. I'm proud to work with you on that so that we can. And then you have the other, the Bank Secrecy Act, and which affects our financial system is very intricate, it's complex, it's complicated, and it's that way because we have a very diverse clientele out there. You have people on the up end of the income scale making millions and millions of dollars that we have to work with on Wall Street investment. But then you got that other person. You got 50, 60 million unbanked and underbanked people who, if they have an emergency surgery or they need help, all they got as a lifeline is that pawnbroker. And now we've got, as a result of overregulation, many traditional banks that have had a long working good history with pawnbrokers. All of a sudden, we have our great banks closing their accounts because of this overregulation. So, Mr. Chairman, I think this is a great hearing. I look forward to it. Welcome all of the distinguished panelists we have, and thank you very much.
Thank the gentleman from Georgia for his comments and his hard work on our issues to this point as well. Today we welcome the testimony of our witnesses, Secretary Brian Schneider, Illinois Department of Financial and Professional Regulation, on behalf of the Conference of State Bank Supervisors, Mr. Tim Baxter, President, Swipco ATM Solutions, on behalf of the National ATM Council, Mr. Jason Oxman, almost gave you a promotion there, Jason, Chief Executive Officer, Electronic Transactions Association. You look like a doctor with your bow tie this morning, so. Dr. Emmanuel Orozco, I hope I got that right, Director, Migration, Remittances, and Development, Inter-American Dialogue. Thankfully, you all have easier names to pronounce than the group we had yesterday, because I think every single one of them was like Lutkemeyer. It was difficult to pronounce, but hopefully we'll be able to be respectful of you in your name today. So I thank each of you for being here. You'll be recognized for 5 minutes to give a PowerPoint presentation or testimony. Without objection, each of written statements will be part of the record. For those of you who hadn't been here before, the lighting system is green, go. When the light turns yellow, we've got about a minute to wrap up, and turns red, we'll gavel you out here. Also, if you would pull, those microphones do come forward. A lot of times, I see Mr. Roscoe there is pretty far from him. You can straighten it out, or you can pull that box to you if it makes it more comfortable to you. Our sound system here is not the great, the acoustics not the greatest, so we want to make sure everybody has a chance to be heard. And our folks who are taking the testimony today need to be able to hear you clearly. So we thank you for that indulgence. And with that, Mr. Schneider, you're recognized for 5 minutes.
Good morning, Chairman Lutkemeyer, Ranking Member Clay, and members of the subcommittee. My name is Brian Schneider. I'm the Secretary of the Illinois Department of Financial and Professional Regulation. It is my pleasure to testify today on behalf of the Conference of State Bank Supervisors. I want to thank Chairman Lutkemeyer and the subcommittee for its work over many years on this important issue. State regulators are locally focused and locally accountable. We have seen the consequences of de-risking for our banks, their customers, and the communities they serve. State regulators charter and supervise 78% of the nation's banks. We also are the primary regulators of more than 23,000 non-depository financial services providers, including money service businesses, commonly known as MSBs. Data collected through our nationwide licensing system, NMLS, shows that MSBs were on pace to handle over $1 trillion in transactions during 2017. As a banking regulator, I expect state-chartered banks in Illinois to understand the risks of their customers and to effectively manage those risks. I do not expect nor require my supervised banks to reject entire categories of legally operating businesses. As a regulator of a broad range of MSBs, I see firsthand the challenges these companies can face in getting and maintaining banking relationships. Indiscriminate de-risking, a practice that eliminates MSB bank accounts, not only weakens access to financial services, but actually makes enforcing the Bank Secrecy Act more difficult. It also becomes a public safety issue. I'm aware of de-risking both in Illinois and across the nation. I hear stories about how legitimate MSBs physically carry large amounts of cash because they have no other means of money transmission, a dangerous practice. Just last year, an MSB in Seattle was robbed of nearly $130,000 in cash that it was keeping in an in-store safe instead of a bank account. 2 years ago, my own agency identified an MSB whose agent transported $686,000 in cash to Jordan after its credit union accounts were closed. Today, I want to emphasize the commitment state regulators have to responsible and efficient MSB oversight. I will also share some of the solutions we have developed to give regulators, industry, and consumers greater visibility into the existing, emerging, and evolving risks for MSBs. Virtually all states have a comprehensive and rigorous licensing, reporting, and examination process for MSBs. If an MSB is found to be out of compliance or in violation of these requirements, it is subject to enforcement action. And in extreme cases, this can include revoking its license. Enforcement actions, as well as licensing information, are available to the public on our consumer-facing website. And indeed, there were nearly 3 million visitors to the site last year. This week, CSBS released a self-assessment tool for MSBs intended to reduce uncertainty surrounding BSA AML compliance, increase transparency, and address de-risking. CSBS launched a similar tool for banks early last year. In October, the CSBS task force that I chair created a fintech industry advisory panel made up of companies from the payments and money transmission, lending, and community banking sectors. The panel solicits industry input to help states modernize regulatory regimes, identify friction points in licensing and multi-state regulation, and discuss solutions. Right now, CSBS is building a new technology platform designed to transform state examinations, helping states respond to increasingly borderless financial markets. State regulators also are working together to find more efficient ways to regulate MSBs. Just last week, several states, including my own of Illinois, announced a multi-state agreement that standardizes the licensing process for MSBs. Under this agreement, if one state reviews key elements of state licensing for a money transmitter, including BSA compliance, then other participating states will accept that work. This effort to streamline the MSB licensing process is a great example of state-driven initiative, innovation, and experimentation. Thank you for the opportunity to testify today, and I look forward to answering your questions.
Thank you, Mr. Snyder. Yields back his time. Mr. Baxter, recognized for 5 minutes.
Chairman Lutenmeyer and the Ranking Member Clay, members of the subcommittee, thank you for the opportunity to be here to testify before you today. My name is Tim Baxter. I'm president and co-owner of Swipeco LLC, an ATM solutions company that operates ATMs as well as provide ATM services to other operators and owners. I am also a former U.S. Marine who enlisted in 1970. I am testifying before you today on behalf of the National ATM Council, an association of individuals of businesses engaged in the ownership, operation of servicing independent ATMs in the United States. Of the approximately 470 ATMs located throughout the United States, 60% of them are independently owned. Since the launch of federal law enforcement regulatory agencies of Operation Choke Point in 2013, Choke Point continues to be a growing threat to the continued existence of America's independent industry, an industry that began in 1996. An alarming number of banks, in the name of de-risking their institutions because of Choke Point, have closed the bank accounts of independent ATM operators throughout the United States. Hundreds of small businesses have been told by their banks without any prior notice or any explanation that their accounts are closed. These account closures began to occur when Operation Choke Point was announced and continued through 2016. In 2017, the accelerator of Operation Choke Point was placed at the floor, and we saw more bank account closures than any other prior years before. There are two things that are essential that I believe the subcommittee should understand. First, there is no logical reason, given any way that our industry is structured, that we operate for banks, with banks, and we are heavily regulated through our sponsoring banks. Second, no independent ATM provider can remain in business without a bank account. Every ISO and independent ATM provider must be sponsored by a sponsoring bank. Before getting into business, anyone wanting to become an owner is heavily vetted through our due diligence process, and if they survive that process, then thereafter the ISOs are required to submit quarterly reports to the sponsoring bank for each terminal as well as undergo annual reviews and audits by the sponsoring bank. All ATM providers must operate in accordance with the detailed network rules associated with our industry. When it became clear, despite detailed safeguards, that treating ATM operators as high risk was considered appropriate by banks and regulators, NAC set out to develop a set of operational guidelines for independent operators in the best interest of our industry. NAC modeled our guidelines based upon the provisions of FFIEC's BSA AML examination manual published by the FFIEC on their website. An independent ATM industry plays a vital role in the nation's economy, for many of our terminals are located in underbanked, low-income neighborhoods in very rural areas where there are few banks and fewer bank-owned ATMs. Continued account closures will force even more independent operators out of business and will choke out convenience to cash for millions of Americans. The consequences of disappearance of independent ATMs to our nation, especially to those in the underbanked areas, are severe, primarily by, or they are supplied primarily by independent operators. Includes Americans that receive benefits monthly through the EBT cards. Many of these Americans depend upon our ATM machines to be able to access cash each month. NAC, and including myself, just last July met with the acting comptroller and his senior staff at the office of the OCC. We have offered to work with the OCC toward finding resolutions that would further the common interest of NAC, the OCC, and other banking agencies to achieve fair and effective enforcement of statutes, regulations, while assuring availability of financial services to law-abiding legitimate businesses without imposing undue and unfair treatment. With respect to the subcommittee, we would appreciate it if you would join us and urge the Comptroller's Office and other federal agencies to work with NAC and the men and women of NAC to make this industry a safe industry and an operational industry that everyone can work with.
Gentleman yields back. With that, Mr. Oxman, you're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Chairman, and thank you to you and Ranking Member Clay and the subcommittee for having us here today. The Electronic Transactions Association appreciates the opportunity to speak to the payments technology industry's efforts to fight fraud and ensure that all consumers have access to safe and convenient financial services. ETA is the leading trade association for the payments industry. We represent more than 500 companies that offer electronic transaction processing products and services. In short, ETA members power commerce in this country. It is an exciting time in the payments industry. Consumers and merchants benefit from a robust payment system that provides nearly universal access and strong consumer protections against fraud. Consumers can pay for goods and services using a wide variety of new payments technologies, ranging from EMV chip cards to mobile wallets to contactless cards. All of these are secured by advanced technology, including encryption and tokenization, and consumers are protected against any liability for fraud. Now, notwithstanding this progress in technology, there have been challenges, particularly from Operation Choke Point. It has contributed to the de-risking and ultimately limited consumer access to financial services, while also making it more difficult for legitimate businesses to access the payment system. Today, I'd like to, in particular, thank Chairman Luetkemeyer for his efforts in fighting Operation Choke Point and for H.R. 2706, which we look forward to seeing enacted into law. I'd also like to highlight the ways that ETA members and the payments industry combat fraud and explain why a collaborative approach between government and private sector, as opposed to an approach like Operation Choke Point, is the best way to protect consumer interests and expand financial inclusion. As payments companies are generally responsible in most cases for fraud in the first instance, under both federal law and payment network rules, our industry has a strong interest in making sure that fraudulent actors do not gain access to payment systems. And we've found considerable success. In 2016, nearly $6 trillion in credit, debit, and prepaid card transactions were processed in the U.S., of which only $9 billion was fraudulent. That's a fraction of 0.1%. In addition, a recent survey of ETA member companies found that more than 10,000 merchants were discharged from the payment systems for fraud last year. For both back-end systems as well as consumer payment products, payment technology firms have heavily invested time and resources into ensuring data security. For example, ETA members have deployed effective due diligence programs to prevent fraudulent actors from accessing payment systems and terminating actors who are fraudulent from the systems. Those programs have helped to keep the rate of fraud on payments at remarkably low levels. ETA also works closely with industry leaders and federal regulators like the FTC to establish guidelines that prioritize security and risk mitigation. In 2014, ETA first published our guidelines on merchant and ISO underwriting and risk monitoring. In 2016, we published the Payment Facilitator Guidelines, and today we're pleased to announce the 2018 update to the ETA guidelines. These new guidelines, published today, contain updated industry best practices, including updates with the Financial Crimes Enforcement Network's new beneficial ownership rule. These guidelines provide a basis for payments companies to work cooperatively with federal regulators and law enforcement toward our shared goal of stopping fraud. Unfortunately, such cooperation has not always been the case. For example, Operation Choke Point employed the wrong tools, it was unnecessarily confrontational, and it created serious risks to law-abiding processors without producing any benefits to consumers. It was based on the flawed assumption that increasing liability on lawful payment companies for the actions of legal merchants would somehow reduce fraud. In practice, such new liability standards on payments companies resulted in serious adverse consequences for both merchants and payments companies as well. The blunt force to discourage banks and other processors from working with legal merchants that were branded as politically unfavored. Although Operation Choke Point thankfully has been halted, it is important to recognize there is nothing to stop the Department of Justice or the CFPB or the FTC or even a state attorney general from bringing a case today that looks very much like Operation Choke Point. We are one of the most innovative industries in the world in payments. Our job is to provide unbanked and underbanked consumers and merchants access to financial systems, and we look forward to an opportunity to work collaboratively with government and with law enforcement to fight fraud in ways that are more productive than Operation Choke Point. Thank you for the opportunity to be here today.
Thank you, Mr. Oxman. Dr. Roscoe, you're recognized for 5 minutes.
Thank you very much, Mr. Chairman and members of Congress. Thank you for allowing me to testify on this subject of de-risking, particularly providing solutions to this problem. The ecosystem of financial services today is far more complex than any other point in time. There is an amazing accessibility of financial services, financial vehicles, and financial institutions providing services to people and to businesses to operate. That has created a very complex web of interrelationships that has enabled a much more robust system of financial services to people. However, in many cases we have seen that banks have deemed and perceived the handling of third-party funds from these MSBs a financial risk. My colleagues have explained some of the reasons and the problems they face with this problem. And overall, what we find is at least 3 major patterns. The first one is that the decisions to terminate bank accounts occur in predominantly a discretionary scope with limited accountability. There is a problem of transparency and accountability in explaining why a bank account is terminated against a money service business. Second, and this is a troublesome issue, is that the relationship between the trade and the account closing do not occur clearly in correspondence to where risk is happening. For example, we see money transfers taking place from parts of the United States to other parts of the world, and there is no correspondence between the risk perceived and the real threat taking place. Another problem is that the increase in financial services is mostly coinciding with the increase in intermediary account closures. So there are at least 5 issues where this problem can be addressed, can be solved. The first one is it's important to deal with more transparency and accountability among predominantly banking financial institutions. Second, it's really important to look into better industry trade and also country risk assessment. Many of the assessments of perceived risk are not evaluated properly in terms of where the threat is happening. Data sharing through risk-based data clearinghouse is also an important area of attention. For example, many of these companies, the money service businesses, are the first line of defense against financial crimes. And they have significant knowledge and information about where perceived threats can happen and how to stop them. Sharing that information will be important to really address the threats. Another important aspect is that it may be important to consider to include bank MSB services in the review of the Community Reinvestment Act. The Reinvestment Act tried to look into how banking institutions are providing financial services to underserved communities. And when it comes to the account closures, this is really an important matter. There are different experiences in countries where the requirements to expect banks to really provide documentation as to the reasons of account closures can really improve the support of MSBs. Spain, for example, in Europe, in the European Union, the Payment Service Directive requires that if a bank is going to close an account, it needs to justify why they are doing it and documenting it. Giving the right also rebuttal to MSB is also an important procedure. When it comes to risk assessment, I think we need to work a little bit more on that. The existing data on country and industry risk is not systematic and oftentimes is not shared. The assessment of risk does not always coincide with the account closures. Although, for example, when we look at remittance cross-border payment companies, they are able to manage risks. There is a recognition that they do significant work along those lines. But when we look at the correlation between risk and money transfer to different regions in the world, the corresponding doesn't exist. Yet those companies are actually affected along those lines. Thank you very much.
Thank you, Dr. Roscoe, and thank all the witnesses for the testimony today. With that, I recognize myself to begin the questioning for 5 minutes. Mr. Schneider, it would seem to me, after listening to all the testimony this morning, that the regulators seem to be putting pressure on the financial institutions to the point where they're making decisions to no longer be able to continue making relationships with different entities. And whether there's any fire to the smoke that they are being blown at them is hard to assess, but it would seem to me that your job as a financial regulator is more to watchdog, to watch over the banks, to the financial institutions, to see that they're doing things according to the law versus micromanage them. Would you agree with that statement?
Fundamentally, we don't run banks. Banks run banks. We're here to make sure that they operate in a safe and sound manner. And by no means, if they make a business decision that certain types of business are not consistent with their mission, that's fine. But they shouldn't feel untoward regulatory pressure to disqualify certain categories of legitimate businesses from their portfolio because of regulatory pressure. And we make that clear when we talk to banks, quite candidly.
Well, every bank has a different business model. Mm-hmm. Credit union has a different model.
Exactly.
And they are all located in different communities. Mm-hmm. That have different needs.
Right.
They're different sizes, different sorts of makeups. By the way, their economies are all diversified. So it's important, I think, that you have the discretion to be able to go in and allow the bank to do what it needs to do to grow the local economy and make it all happen. So it's frustrating to see this happening. When you see, I've had people, with regards to the BSA ML stuff, and a couple of you guys are caught in this, especially the southern tier of states, banks that are doing banking business with individuals and companies in Central and South America are being choke pointed out by the bigger banks here in this country saying, we're not going to do business with you because you do business down there.
Right.
Which is like, how can these banks micromanage these other banks that are just customers of them? I mean,
In some cases, I think this is perhaps fundamentally because of a lack of understanding of the significant oversight that money service businesses have at the state level. You know, they are licensed by state regulators across the country and examined in depth. We in the state system have the capacity to examine every multi-state operating money service business on a pace of once every 18 months. So these are heavily regulated businesses, and if banks understood that better, I think they may be less reluctant to bank them.
Mr. Baxter, thank you for your service. You mentioned you're a Marine, and I appreciate that. You're one of the industries that has, just in recent time, has been targeted. You weren't on the initial list of the FDIC high-risk businesses, but you have become a target for them. Can you tell me what you believe, why that's happened, and the response that you're getting, and how you are going to try to approach all this, and any other comments you'd like to make? Because I know you're in the crosshairs right now.
I believe that with the inception of Operation Choke Point, it particularly reached a stage in which regulators were going into banks and asking specifically, do you have ATM accounts? That's a specific question of targeting one specific industry where they are almost requiring, and I can't say they're requiring because I'm not standing in their offices and I'm not involved in these conversations. But when you start receiving letters in the mail from your bank, such as I did, and many of my clients did, and many of my colleagues did throughout the industry, that have simply zero explanation as to why your account is being closed, doesn't even mention that you're high risk, but it has zero explanation, and you call to ask for an explanation because you now feel like a criminal, you get no explanation. So I would ask the committee to consider, why is it that the banks and the regulators, apparently, from what I see and what we see in our industry, do not want us to be in business? Why do we want to remove what's been an excellent system in managing ourselves through our system that we have with sponsoring banks, network rules, applying everything that we can to the industry standards to operate an ATM machine exactly as a bank operates an ATM machine? Yet all of a sudden we're deemed unacceptable citizens in society. How are we going to go about replacing 60% of all the ATM machines in the United States?
My time has expired. Thank you very much for your comments. With that, we go to the ranking member of the committee, Mr. Clay, gentleman from Missouri, recognized for 5 minutes.
Thank you, Mr. Chairman. Let me go back to Mr. Baxter. You know, some industry actors have stated that the types of extreme fluctuations in cash turnovers that are a normal part of the ATM business are actually triggering regulatory acting that results in banks closing accounts for ATM owners and operators. Can you discuss what is pushing financial institutions to de-risk in these situations in spite of knowing the needs of this type of small business?
Well, let me address the fluctuation of cash that you brought up. That occurs throughout various times of every month in every city and state. First of the month is heavier usage, so you see a higher fluctuation of cash out and cash back in. There are other instances that will create that. We are also asked on a regular basis by NASCAR, by carnivals, by fairs in every city, state that you can think of to supply ATM machines so that vendors have cash available to sell hot dogs and corn dogs and Cokes to men, women, and children. So we do that. That's what we do. That's how we make a living. Yeah. So that's how our cash can influx and change.
Mr. Baxter, why do you think there are more independent ATMs located in areas with higher concentrations of underbanked and unbanked citizens, and as opposed to the big banks, Chase, Manhattan, Bank of America, locating their ATMs in those areas?
Because we're hungry. We're willing to do that. We're willing to go into those areas. We're willing to service those communities. The banks are not. They're not willing to do that.
So the banks just turn their back on people who they don't think they can make enough money off of, is what you're saying?
That and potentially risk of robbery, which we take that risk.
Risk of ATM robberies?
Yes, sir. The ATM machines being broken into.
Okay, is that,
Our ATM machines are located inside convenience stores, for example.
sure.
And most convenience stores throughout the country. Those businesses are not open 24 hours a day. And sometimes those businesses get broken into,
I see,
and our cash gets stolen.
I see. All right, thank you for that response. And Mr. Snyder, what actions have your department taken to assess the impact that de-risking may be having on access to financial services for vulnerable populations?
Well, it's certainly a concern to us that all of the citizens in all of our states receive a wide variety of financial services. In my state, we've got very large banks, we've got very, very small banks, and we've got all sorts of non-depository institutions. We talk with our banks to make sure they understand the risks that certain types of clients present to them so they don't make a misinformed decision to disqualify a certain type of actor from getting banking services. And you know, we work closely with innovators who are trying to bring new financial services to traditionally underserved communities so that they're able to deploy them quickly. And you know, so that's our role, is to be nimble, to foster innovation, and fundamentally to make sure everyone understands that if you're dealing with a non-depository money service business, they are appropriately and thoroughly regulated, including for BSA AML compliance. So think about that level of scrutiny that they're receiving when you're making your risk decision as to whether or not to bank that particular company.
And have you found that independent owners of ATMs, fees are higher than regular banks, or how does that work?
I don't know if I want to misreport anything. We don't have studies in Illinois that I'm aware of that look at those fees. You know, we've actually tried to reduce regulatory burden on non-bank ATMs, eliminating unnecessary registration requirements, so hopefully that can help drive some lower fees for everyone.
So it's possible that the regular banks charge higher fees or just don't want to be in those communities at all?
It's entirely possible, and that could be something that we should get to studying at some point.
Thank you so much, and my time is up.
Gentleman's time has expired. With that, we go to the Vice Chair of the committee. Gentleman from Pennsylvania, Mr. Rothfuss, is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Oxman, during the Obama administration, the Federal Deposit Insurance Corporation released a list of supposedly high-risk businesses that should be targeted for possible de-risking. This list included payday lenders, tobacco vendors, and pawnbrokers. Do you know how this list was populated?
Thank you for the question, Mr. Vice Chairman. That list, I think, is one of the most stark examples of what Operation Choke Point was really about. It was effectively a concession that this was a list of politically motivated, targeted merchant categories, as far as we could tell, that were otherwise offering legal services, but it was a signal to the payments industry that providing lawful payment services to those merchant categories would result in heightened scrutiny by federal regulators. That was the entire purpose behind Operation Choke Point, seeking to effectively deputize payments companies in what we considered a politically motivated, by the prior administration, effort to targeted disfavored merchant categories.
Well, was there a basis that the FDIC could decide that these industries were high risk?
As far as we could tell, looking at the list published by the prior FDIC, The basis was not one of any substance based on anything that we could determine other than a signal to our industry to stay away from those disfavored merchant categories.
What about risk in the sense of high risk? I mean, was there a definition for, quote, high risk?
The prior FTC did not provide us the kind of guidance that would have been a tie between the delineation of those merchant categories that you mentioned and the very sophisticated risk analysis that our industry has been using effectively for decades to prevent fraud.
Risk in the sense of a risk to the financial system, risk in the sense of, look, there are actors out there that we suspect might be engaged in some activity. Again, I'm trying to get my arms around what was, quote, high risk.
Yeah, our industry, the payments industry, has, and working in conjunction with federal regulators literally for decades on management of risk issues, does have very sophisticated, very effective means of determining high-risk merchants. And it is not done necessarily by the type of categories that you mentioned. That type of listing of merchant categories without any further analysis from the FDIC.
What would be a high-risk merchant?
So a high-risk merchant would include an analysis, for example, of what we call chargebacks. Chargebacks are effectively returns initiated by consumers using their credit card or debit card at a merchant. If chargebacks reach a particular level, that suggests that there might be something going on and that the merchant should be examined more closely. Again, has nothing to do with the category that the merchant happens to be in or the particular products the merchant has to sell.
So there was a prejudice going in where that analysis wasn't done.
It appeared to us in examining the list provided by the prior FDIC that it was based on the types of products sold and not an actual analysis of the relative risk to the payment system of those products.
Mr. Schneider, in your testimony, you said that virtually all states have a rigorous licensing, reporting, and examination process in place for money service businesses. You also described some of the enforcement actions that state regulators have taken against the bad actors. When you consider the strong role that state regulators play in ensuring that money service businesses are not conduits for illicit finance, it is interesting that federal regulators still targeted these businesses for de-risking. Do you believe that state-level regulators are doing enough to counter the abuse of our financial system by illicit actors?
I certainly do. Again, we conduct hundreds of exams each year of money service businesses, including for BSA AML compliance. And we are on the front line with those companies to help them understand what their own risks are. We just today issued a self-assessment tool that money service businesses can use on their own to better understand their risks so that they mitigate their risks so that when we come in to examine, we can give them a clean bill of health. So I think state regulators are really on the front line in making sure these non-depository institutions follow the law, and that should give great comfort to our federal counterparts as well as to banks.
Well, on the federal
service them.
counterparts, have federal regulators consulted with the state regulators?
We work very closely with federal regulators, FinCEN, the OCC, the FDIC, across the board. Mr. Williams has a bill, H.R. 3626, that would help us cooperate even greater with our federal counterparts.
My time has expired. Thank you.
Gentleman, time has expired. With that, we go to the gentlelady from New York, Ms. Maloney, recognized for 5 minutes.
Thank you. I want to thank you and the ranking member for holding this hearing. I think it's on a tremendously important issue, and I am very sympathetic to neighborhoods in our country having access to ATM machines. It's in some cases the only banking access they have. When I was on the city council, I represented a very economically challenged neighborhood, East Harlem. And the banks redlined it, meaning they all left. They just closed their doors and left without any banking services. I remember I appealed to them to pool their resources and leave one ATM machine so there would be some banking in this underserved neighborhood. And they wouldn't do it. And then one bank opened up an ATM machine and left it in the community, and I'm very grateful to this day to that bank. So when people close up all these ATM machines, they're really closing up access to capital and to banking in communities. And I feel that we have a responsibility to make sure that all neighborhoods are served. And if banks don't want to be any part of helping low-income neighborhoods, then maybe we have to look at doing something through the federal government. We have to figure out some way to help them. So I want to first ask Mr. Baxter, as you know, there's a lot of evidence that some banks are terminating the accounts of independent ATM operators, and they say that they're doing it because of regulatory risk and the pressure from the regulators, but there's sometimes allegations that they're doing it for competitive reasons, that they don't want the independent ATM operators competing with the bank's own ATMs. But sometimes when the banks do this, they claim that they're doing this totally for regulatory reasons. And how can we ensure that they aren't using the concept of regulatory risk as an excuse to undermine their competitors?
Thank you for asking that question, and I do agree with your statement in that there is a competitiveness to this theory of closing down companies that have been in operation for 10, 15 years. In my case, in my company, for 4 years. I can't really answer why they've taken this position all of a sudden, other than it does cause you to think that maybe there is a competitive edge here that the bank is interested in as well. But our industry has been in existence, as I said before, and approved to be in existence since 1996. So my question that I would love to ask the banks and the regulators and even the administrations of our country that have made decisions to close our bank accounts is, what happened overnight, whereas we all of a sudden became a high-risk business that exists in this country that hadn't existed for 14 years that I've been in the industry in total. It's overwhelming, it's shocking to have businessmen that have invested in small business, their life savings, that are school bus drivers in Tennessee, that have various other occupations that they do besides their small ATM business, to bring cash to America. And that's the way I look at it. We bring cash to America. We're not a money service business. We are a business that delivers cash to America. So I really don't know how we can overcome what's currently taking place without your help, without your insight, without your leadership, to hear our cry and to hear that this industry is suffering and will ultimately go away if something isn't done by the great country that we live in and the people that lead this country.
Where are there more independent ATMs but no bank ATMs?
Where are there more? In rural areas.
In rural areas?
In underserved banked areas.
So in low-income areas and rural areas?
Correct.
And
But you will find us also in malls, cities, all over the country.
and if banks just cut off all independent ATM operators, who would be harmed the most?
America in general will be harmed the most. The people that are underserved and underbanked will be hurt the most. That's who will be hurt the most. In addition to the hundreds of ATM operators that will be placed out of business, and I'll have to look over to this beautiful lady in blonde hair sitting to my left over here, who I made a commitment to 4 years ago when I joined in with my partners to start this business, and tell her I failed when I promised her I wouldn't.
Oh, my time has expired. Thank you.
The lady's time has expired. With that, we go to the gentleman from North Carolina. Mr. Pittenger is recognized for 5 minutes.
Thank you, Mr. Chairman. I do thank each of you, our distinguished panelists, for being with us today, and your perspective is well received and important for all of us. Mr. Oxman, I'd like to go to you first. I'd like you to just speak additionally to the tools and technologies the payments industry has developed to protect consumer financial information.
Thank you, Congressman. And as you well know, having the second largest banking hub in the country in your district,
Yes, sir. Thank you.
financial institutions are working with technology companies to deploy technologies that protect consumers. They have consumer-facing components to them. As the fintech industry, we're deploying mobile payment services and chip card services and even contactless card services. Anybody who's been watching the Olympics has seen that tap-to-pay technology, much more secure than any technology we've ever deployed in the history of our industry. And on the back office side, if you will, on the network side, we're deploying encryption and tokenization services that protect consumers' information and guarantee them 100% liability protection against any fraud.
All right, good, thank you. Speak as well then to the incentives that the payment industry has and businesses have to prevent fraud.
Yeah, I think that's a very important question because in the payment systems, our industry, in the first instance, has liability for fraud. As any consumer who has seen a fraudulent charge on their credit card statement knows, they need only contact their card issuer, their financial institution, and report that fraud, and they don't have to pay for it. Well, guess who has to pay for it? We do in the payments industry. So the incentives could not be more powerful for the payments industry to protect against fraud. We've done a good job with about $7 trillion in payments processed in the U.S. last year. Only about 9 billion of those were fraud, so it's a fraction of a tenth of a percent. But the criminals, they're smart, they're active, and every time we deploy a new solution, they move on to the next criminal activity. So we have to remain vigilant. But the incentive on us is very powerful, as you noted, because we have liability for fraud if we don't stamp it out.
Yes, sir, thank you. I'd like to ask each of you, since the financial crisis, many institutions are terminating relationships, as we all understand, with consumers or companies deemed high risk, complex, or not profitable. Why do you believe we are seeing financial institutions terminate these long-standing accounts held by certain industries? I'd just like you to elaborate further on that, Mr. Schneider.
Well, again, I do go back to, I think there can be just a misunderstanding as to the degree to which regulators do supervise non-depository money service businesses. Maybe there's some notion that they are not looked after, that they are this big gaping BSA AML risk because they're not supervised, and that's just not the case. And I think our data shows that, and if banks begin to better understand that, they won't view these companies as inherently risky because they know that they're being supervised.
Well, to that end, what specific actions can Congress take to combat the trend in de-risking?
Well, one thing would be, collaboration among regulators. Our federal system is a beautiful one. It provides some regulators, like state regulators, very close to entities and federal oversight at a national level. Our ability to work with our federal partners effectively is a great value. Then everyone gets the same message being delivered as opposed to mixed messages. So again, I mentioned HR 3626. We can't communicate as freely as we should with our federal counterparts concerning money service business supervision. So if that avenue was opened up for us, I think it would be more consistent messaging.
Thank you. Mr. Baxter, as you discussed your difficulties and challenges, have any of the banks that have been closing accounts, have they been willing to sit down and discuss with you the accounts and why they're being closed?
Absolutely not. You're sent a letter, 2 pages, approximately 2 pages, with an 800 number on it if you have any questions. When you call the 800 number, the voice on the other end of the phone tells you that you received the letter. You reply, yes, I did. It said your account will be closed in the time span in which is stated on the letter. When you ask why your account is being closed, there's no discussion. They have nothing to say other than the enforcement of the letter will take place.
Mr. Snyder, do you have any more response to that?
Well, at the end of the day, banks do make decisions. We would like to encourage our banks to be as open and forthright with their customers as they possibly can be, and again, to not be making broad generalizations about industries, but to be looking at individual risks and how they're appropriately mitigated.
And Congressman, if I may, this is why HR 2706 is so important, because it sends a very strong legal signal to banks that they don't have to shut off what regulators have deemed risky industries just because they're on a list of risky industries. The banks want to serve customers, they want to serve merchants, and we need to make sure that they don't cut people off just because regulators are putting pressure on them to do so.
Thank you. Very good. My time has expired.
Gentleman's time has expired. With that, we go to the gentleman from Georgia, distinguished gentleman, Mr. Scott is recognized for 5 minutes.
Thank you, Mr. Chairman. You know, as I'm sitting here listening to this hearing, I'm reminded of my favorite playwright, William Shakespeare. And he wrote my favorite play, Julius Caesar. And if you all recall, you're familiar with Shakespeare, when Julius Caesar's walking through the Roman gardens with Brutus and Mark Antony, there's this woman that wails, "Beware the Ides of March." Well, I'm here to tell you we need to beware of the Ides of our banking regulators. And nowhere is this more poignant than with our pawnbrokers. Let me give you an example. Here are our pawnbrokers who are the main, almost final lifeline to the unbanked and underbanked. And because of this overregulation, because of this extension through the Bank Secrecy Act and money laundering, all of a sudden, to de-risk, they are closing the bank accounts of the very people who are there to give lifeline to the most underbanked and unbanked by making the institution in our financial system unbanked and underbanked themselves. Now, why is this? Can you all tell me why these banks are taking away and closing down the banking accounts of businesses that have been loyal customers and have had great relationships, no problems? Why? And what must we do to stop it?
Speaking as a
I
regulator,
really want to hear
again,
from all of
you know,
you on this
my-
because my Shakespearean moment would be meaningless if we do not get to the bottom of this, because March is rapidly approaching.
It's very close. Well, we regulate pawn dealers in my department, so I have great familiarity with the services that they provide. And I just keep coming back to, I think it's misunderstanding. Data will ultimately be our friend. You know, risk can be, I think we as regulators have to make sure we're talking to the institutions that we regulate. And when we talk about risk, we talk about risk as something that you mitigate, something that you understand, and that you process, and that you mitigate. And as state regulators, we're trying to give our institutions the tools to do that through our BSA AML self-assessment tool.
Yeah,
so
but
that
the
they'll
issue,
understand that and then make better decisions.
yeah, the issue is here we are in Congress, endued with the power of the people to do something about this sort of thing. And we need you all to tell us, do we need to pass a law to prohibit these banks from just arbitrarily closing down an account of a pawnbroker who's servicing these low-income people who have no other choice until they do something? I mean, we got to do something here.
Yeah, Congressman.
What must we do?
Yeah, I think, Congressman, it's H.R. 2706 really that needs to continue the march toward the president's desk, because these banks that you're referring to, they don't want to shut off customers either, but they're being pressured to do so by overzealous regulators, or they have been historically. Our hope is that the regulatory environment will continue. But as you well know, having the hub of the payments industry in Georgia,
Right.
Our industry is desperate to serve those merchants that want us as service providers. We don't want to shut anybody off, but in many cases, regulators are forcing that to happen, and that's what we need to have come to an end.
And as Democratic chairman of the FinTech caucus, you know how vitally I'm concerned. And we need to prohibit this. We need to send a very loud message to the banking community. And you all who are banking regulators or state regulators need to stop this, put something in place, and stop cutting off, because then when you cut off the banking account, you got nothing. I mean, even with me, can you imagine if the bank cut me off for just as a citizen, or you're out there in no man's land? Yes, sir. I think, Ms. Arso, I think you and
Thank you. I think there is a moral hazard between banks and regulators about how to tackle risk. It's you can put they put the blame on banks. The banks put the blame on regulators. The fact of the matter is that there is a problem, a serious problem of transparency and accountability on both sides, and that's what needs to be tackled at this point. And the instrument exists.
Mr. Baxter, could you, because
quick.
the pawn shops, real quick, thank you, Mr. Chairman, because the pawn shops are not in this by themselves. Your money machines are in this same vice, am I right?
Yes, sir.
And what do you think we need to do?
Well, I do think that there are overzealous regulators out there. I do think that there was a misconception in business in general as to what businesses need to be targeted. In our industry, as I said, there was vetting that is done with each and every one that wants to enter into this business, own and operate ATM machines.
Well,
The individual vetting includes background checks, which we do a U.S. criminal report, an OFAC report, a Patriot Act search, watch list, driver's license search, bankruptcies, liens, and judgments, Secretary of State filings, U.S. sex offenders, personal credit report, business report. All of this is done through the corporation, Microbuilt, in my situation, that my sponsoring bank highly recommended that our corporation use. We have
Thank you.
followed that to the T.
Thank you so much, and thank you, Mr. Chair, for giving that little extra minute. And I'd like to submit this record from the National Pawnbrokers Association to the record.
Without objection, and we appreciate the gentleman's passion on this issue as well.
Thank you, sir.
With that, we go to the gentleman from Tennessee, Mr. Kustoff, recognized for 5 minutes.
Thank you, Mr. Chairman, and I do thank the witnesses for appearing this morning. Mr. Oxman, I also appreciate the comments regarding Operation Choke Point, and as well as the dissertation in your written testimony. If I can, as it relates to Operation Checkpoint, there's no doubt, and you stated that accelerated, if you will, the de-risking of financial institutions and forced some consumers out of the financial system entirely. If I could, as it relates to the regulators, can you state, was there overreach by federal regulators as a result of Operation Choke Point? And if the answer is yes, can you give examples of that overreach?
The answer is most definitely yes, Congressman, and thank you for the opportunity to highlight that overreach. I would give, rather than my assessment, I would give the assessment of the court system. For example, in Georgia, which found that the prior CFPB, prior to the current administration, had overreached so badly under Operation Choke Point that they were sanctioned. The CFPB was actually sanctioned for their overreach against one of our member companies. The entire case was dismissed with sanctions against the CFPB. That is but one of many examples of overreach by federal regulatory agencies that made Operation Choke Point such a danger to, frankly, our economy, because it does, as you've heard so much about today, cause financial institutions to effectively shut off their own customers because of concern of that regulatory overreach. We hope to never see that again, but sadly there are numerous examples across many agencies from the prior administration.
Thank you, Mr. Oxman. Mr. Snyder, from your vantage point in your state, can you testify as to whether there was overreach by federal regulators as a result of Operation Choke Point and the impact that had in your state?
Yeah, I think there was. You know, the fact is, you know, federal regulators, seeing largely the perspective from just the banking side of it, is different than ours at the state level, where we see banks and non-depositories, and we get insights into all of them. And we did see people doing legitimate businesses losing their accounts in Illinois, and then that's pushing business into the cash economy, which seems to us to be one of the most unsafe ways to conduct business, having people haul bags and boxes of cash around. So I do think there was some overreach. It led to bad business decisions who were making decisions based on what they perceived as regulatory requirements rather than good, sound business practices and risk mitigation strategies. And arresting the attention of the federal regulators through 2706 and other efforts on your behalf could help the situation.
And when these customers no longer have access to the financial products, to the institutions, where do they ultimately go and what do they ultimately do?
Well, that's, to some extent, it's a question you hate to even think about because they won't have choices. There are areas in my state that critically rely on non-depository financial services providers. They need bank accounts to operate. And, we would be talking about people going into, areas we don't want them to go into, loan sharks and things like that. We don't want that happening. We want people to have access to a variety of financial services.
Thank you. Thank you, Mr. Chairman. I yield back the balance of my time.
Gentleman yields back. That would go to the gentleman from Minnesota. Mr. Ellison is recognized for 5 minutes.
I thank the chairman and the ranking member for the time. Let me just make an editorial comment. Operation Choke Point started in 2013. It has now been officially ended. That's important for the record. Also, too, I do resist the idea that there was some nefarious political motive. I think that you had people who were trying to stop fraud, and they did it, in my opinion, the wrong way. And, just sort of like putting an extra burden on all of the businesses that you all represent, I think in many ways had the opposite effect it was intended. I think, Mr. Snyder, you might have put the nail on the head where it's like, look, if you shut down all these businesses this way, it's not like people will not do business. They will do it. But maybe you'll go into a cash economy. It's actually legal to get a suitcase full of cash and carry it from Minnesota to Mogadishu. It's not illegal. You have to declare it, and there are other protocols, but it is among the most dangerous ways to transmit that money, and you for sure don't know who's going to end up getting that money then. So the fact that we have said we're going to do all these things to cut off access has had the opposite effect, which is why I think we ought to have hearings on how to properly de-risk, get people like you to tell us how we should write the legislation rather than just somebody over at DOJ write up something that they think would be good, and then we end up where we are now. So with that, let me seek unanimous consent to introduce letters from the Charity and Security Network regarding their problems with the way we're doing business here. The Global Center on Cooperative Security, they have a statement to this committee on examining de-risking and its effect on access to financial services. And then also Mr. John Byrne, he's submitted something on examining de-risking and its effect on services. And I do ask that these documents be allowed to be entered into the record. These groups are on the front line of the effort to combat de-risking, and I'm pleased that they have taken time to share their views with the committee.
Without objection.
So, question. Sudden and unexplained account closures are creating serious problems for international charities and the people that they serve. For example, on January 29th of this year, Western Union sent a U.S.-based international humanitarian organization a letter closing its account immediately without any explanation for the reasons for this drastic action or giving the charity an opportunity to even address the concerns. Going to your point, Mr. Baxter, where's the due process, When this happens, charities often have extreme difficulties continuing their life-saving work and those that they need. And research shows that nearly 18% of U.S. charities operating internationally are having problems opening or maintaining bank accounts. I think this is a bad thing, and I want to know what you think we should do about it.
Well, Congressman, I think this is an example of why, as you stated eloquently, the philosophy behind Operation Choke Point was wrong. The target of Operation Choke Point was us as payments providers, financial institutions. It's akin to a bank robbery being planned over a cell phone call and law enforcement going after AT&T for that. What we'd like to see, as you noted, is law enforcement, regulators pursue the actual fraudsters instead of seeing the service providers that provide millions of Americans, merchants, consumers, charities, nonprofits, access to payment systems. They shouldn't be targeted. The actual fraudsters should be targeted. So what you've seen as a result of the regulatory overreach of recent years is, and you've heard a lot about it today, financial institutions say, you know what, it's not worth the risk of regulators coming after me for serving a disfavored industry, a charity that operates overseas, so I'll just shut them all off. They don't have to worry about anybody coming to see me and causing any problems. And that's exactly the wrong approach, as you noted. What we think is better, and we think H.R. 2706 does this right, is tell regulators, tell law enforcement at the federal level in particular, pursue the fraudsters directly. Don't pursue the service providers and tell them to shut off entire categories. That's the wrong approach.
Quick question with my limited remaining time. You know, do we ever get all these agencies together to just talk about the effect of them they're trying to de-risk? It seems to me the agencies are trying to say, if any bad money gets through, we don't want to be blamed for it, so we're just going to shut it all down. I mean, is there a need for greater coordination? What do y'all think in my time that I don't have anymore?
I'd just say briefly, sir, your piece of legislation, the Remittance Improvement Act, is a helpful step.
Thanks.
Again, we're there as state regulators doing this. Help our federal, we'll talk to our federal counterparts any day of the week for them to better understand what we're doing so they maybe better understand the real risk and can focus their exams.
Let me thank everybody and the ranking member, and the chair for going over.
Gentleman's time has expired. With that, we go to the gentleman from Georgia. Mr. Loudermilk is recognized. 5 minutes.
Thank you, Mr. Chairman, and thank you for this hearing. I mean, it's no secret I have been a long critic of overregulation by the government to try to fix every problem that exists in the world, and quite often that causes more problems than it fixes. And I think that's one of the things we're looking at here today. I perceive our responsibility in Congress here is to represent the people, the interest of the people. And I also understand that it's the businesses out there that employ those people and provide the services that people need. And as spending 20 years as a small business owner, I've lived through what some regulations, such as Operation Choke Point, has done in the community. In fact, I have an advisory council that is made up of businesses from small business, mom and pop shops, up to executive managers of large businesses in our district. And I recently asked them at one of our meetings, and there's probably about 100 in attendance, so if we could do one thing for business, this was about 2 years ago, one thing for business, would you rather us cut taxes or work on reducing regulation? Almost every one of them said reduce regulation. And when I followed up, I was a little surprised by it. And they said, yeah, lowering taxes helps us as a business, our bottom line, but the regulation hurts our ability to serve the customer. And I think that's what we're looking at. In fact, Mr. Baxter, my youngest son worked in the ATM industry as security. He was in the Army as airborne, and so they brought him on. He was also a private investigator. He was brought on to be additional security for the business because of exactly what you're talking about. They were forced to carry around a lot of cash. And so that was his initial job. He's moved on to do more technical things at this point. But Mr. Baxter, the sheer volume of regulations, is that the main cause of the de-risking, or is it a particular area of compliance like the BSA or anti-money laundering?
I was asked about money laundering just yesterday, as a matter of fact, Congressman, and I was asked, can it be done with an ATM? And I said, I don't know. I'm not a money launderer. I'm not a thief. I don't think like that. I've never considered it. I don't know anyone in business that I work with in this industry that does. It's just not discussed. I would not know how to do that.
Yeah.
Yes, overregulation of our industry is what has brought us to where we are today with bank closures. And I agree with the gentleman that spoke earlier that said that, are any of these departments talking with one another? And I'm not absolutely certain they are. because I think if they were, there would be a lot more understanding of this business, my business, and various other businesses that provide cash and services to people throughout the country. And so I think that's where the disconnect is at, is that a certain group of people have gotten together and decided that they know what is best for everyone, but that the reality of that is just the opposite in terms of small business and what is created by over-regulating.
Yeah, I'm afraid that often, or at least in the case of Operation Choke Point, what we see is somebody not liking what is a legal business and taking, it's our job to determine what is legal and not legal in this nation, and somebody using regulation to make a moral decision to hurt an industry, and we have to avoid that. Mr. Oxman, I appreciate all of ETA's engagement, as well as American Transaction Processors. You're in organizations like both of yours engaging in this because you are the boots on the ground working with those individual business owners who really don't have the time to come up here and testify. While I've got you, when the fear of overregulation causes a financial institution like we've been talking about here to terminate a relationship with a fintech company, isn't it harder for the government to go after the bad actors because the business is now using cash?
Yeah, that's the irony of this, Congressman, and as you know, the great payment processors headquartered in and around Atlanta and the suburbs struggle with this issue every day to prevent fraud from happening, but they're able to prevent fraud from happening because they're on the payment systems. Once you kick them off the payment systems, and as we've talked about, they find alternative ways that we may not be able to see to provide service, it's a lot harder to prevent that fraud from happening. So that is the ultimate irony of Operation Choke Point. You're kicking people off of the very systems that are designed to prevent that fraud from happening.
So in my last 1 second, we basically, under the guise of trying to protect the consumer, are harming the consumer.
That's right.
I yield back, Mr. Chairman.
The gentleman's time has expired. With that, we'll go to the gentleman from Texas. Mr. Green is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank the ranking member as well and the witnesses for appearing. I'd like to talk for just a moment about some of the issues associated with the international charities and the difficulties they are having. Some are having difficulties opening accounts, and a good many others are having difficulties with their remittances. I have some intelligence before me that indicates that 2/3 of the U.S.-based international NPOs are nonprofit organizations, that they're reporting experiencing difficulties with the banking system, such as refusal to open accounts, 10%, and account closures, 6%. Indicates also that 37% of U.S.-based international NPOs reported delays in international wire transfers. Can someone give me some intelligence on why this is occurring?
Maybe I can. There has been a presumption of risk in cross-border money transfers by the nature of the transaction itself, but not by the fact that a cross-border money transfer represents a financial risk. So even prior to Choke Point, the many money transfer operators or money service businesses have suffered account closures at different instances. As their accounts are closed, they face more difficulty in providing services to customers. But then the pattern is that there is no correlation between money transfers, remittances, family remittances, and financial risk, whether it is from money laundering related to drug trafficking or financial terrorist activities, or even other forms of money laundering. However, the systematic practice has existed and has prevailed. There are money transfer companies that sometimes are currently operating only on 2 bank accounts, for example, to send more than 200,000 transactions a month from customers to other customers. And they do have a real challenge on how to provide the services. The main effect, in fact, is that it limits innovation. Currently, the extent of competition is being set back in the money transfer business because the regulatory environment is not allowing them to innovate, invest their resources in innovation, because they have to put their money into complying to different regulatory context and the pressure from banks to keep their accounts open.
Would someone else care to comment?
Congressman, I think this is a terrible example of how Operation Choke Point harms the very people that we're trying to help. Charitable giving is at the heart of who we are as a people in this country. We're lucky that great international charitable organizations choose to set up business here in the United States. But if we deny them access to the payment systems and the ability to send charitable dollars overseas, they're going to leave the country, or, as we've talked about earlier, they're going to find other ways to operate that take them outside of our payment systems and outside of the purview of regulators that are ensuring that they're doing good by doing good. So I think you've highlighted something that is an untoward and unfortunate consequence of Operation Choke Point, the kind of de-risking that we really need to prevent from happening in order to allow charitable organizations and really all legitimate operators in business in this country to access financial services to be able to do good work and benefit our economy.
I have at least one constituent, and I'll come to you. I just want to make this comment, if I may. One constituent who believes that religious affiliation has something to do with the reception you'll receive when you attempt to move into banking. Does anybody have a comment on that as you're making your additional comments? Religious affiliation? Yes, sir.
I've not heard directly, that expressed, but it certainly would be troubling if that were becoming a category of concern in and of itself for someone to not provide banking services on that basis. I was just going to note, I think sometimes, our one pathway forward is data. How do we understand what's going on in this industry? And there's a lot of conjecture, a lot of supposition, but we have data at the Conference of State Bank Supervisors. Our Money Service Business Call Report tracks exactly how much money is being transmitted domestic to foreign. In fact, when filing is ended at the end of today, we'll be able to tell you the country of destination for all of that money. It doesn't in and of itself solve the problem that your constituents are experiencing on a day-to-day basis, but it provides a basis for being thoughtful about this rather than just operating from conjecture and speculation.
Mr. Chairman, would you allow one additional question?
Yes, sir.
Thank you. Can someone give me an indication as to how these limitations that are being imposed will impact the cryptocurrency in terms of persons concluding that maybe there's a better way to do this, an easier way to do it? If you would, please.
Yeah, Congressman, that is certainly a question for those who are de-risked and removed from access to traditional financial services. Cryptocurrency is certainly an option for them. That's not necessarily a bad thing. There are some markets for whom cryptocurrency is highly appropriate, and there are plenty of legitimate and legal uses for cryptocurrency out there. However, what I would suggest is that if the goal of regulators and law enforcement is to be able to look out for fraud and look out for bad actors, we're all better off if they're in the traditional financial system and not de-risked out of it.
Gentleman's time has expired. With that, we go to another gentleman from Texas, Mr. Williams, recognized for 5 minutes.
Thank you, Mr. Chairman. And I'd like to say, risk management is a critical function for any business or financial institution in this country. And assessing risk can become even more challenging if financial regulators institute practices that are unpredictable and carry compliance measures that are costly or misguided. The practice of de-risking has damaging effects on Main Street America and causes financial institutions to terminate long-lasting business relationships if they might be deemed high risk. Operation Choke Point is one of the many examples of executive overreach from the previous administration. And while this administration has taken deliberate action to curb efforts like Operation Choke Point, we must remain vigilant for similar efforts in the future. And in full disclosure, I'm a car dealer, and I've been on the receiving end of Operation Choke Point, so I know what it does. So, Mr. Secretary, I know you and I share Mr. Cooper as a dear friend, so tell him hi. Thank you for being here. I'd like to ask a question to you. I introduced, as you know, H.R. 3626, the Bank Service Company Examination Coordination Act, and this bill will enhance state and federal regulators' ability to coordinate examinations and share information on banks' technology vendors in an effective and efficient manner. So my question would be, can you explain how authorizing state regulators to examine third-party technology service providers is beneficial, and how that could avoid duplicate examinations and reduce regulatory burden?
Yes, thank you very much, sir. I will give Mr. Cooper your best the next time I see him, which will be in a couple of weeks. Your bill, we applaud you for introducing it. It is critically important to making the financial services regulation system more efficient. As I mentioned throughout, one of my themes is we're out there every day as state regulators doing this work, examining these third-party services providers, many of which are money service businesses and new fintech innovators. And for us not to be able to communicate freely with our federal counterparts, for them to know what we're doing and for us to know what they're doing, just results in more examinations, more work, more regulatory burden that seems unnecessary because it's just duplicative at that point in time. So the simple change that your bill, the simple common sense change that your bill would provide could greatly impact a reduction in regulatory burden.
Okay, I have another question for you, Mr. Secretary. Your testimony references Vision 2020, a series of initiatives to modernize state regulation of non-banks. So I would ask you, can you briefly describe this initiative and how it will address de-risking, and what components of Vision 2020 might be applied to make federal supervision even more efficient?
Well, one of our pillars is, coordinating better with our federal counterparts. We're listening to our non-bank fintech companies that we regulate more closely through an advisory panel that will tell us what their pressure points are so we can better respond. One of our pillars is to harmonize state laws as much as possible so that fintech innovators know the rules of the road, know what to expect from a state regulator, know what to expect from a state exam. How we work together as state examiners is another focus of our Vision 2020 initiative. And quite frankly, making sure that the banking system is available to all of these new companies is another pillar of our Vision 2020. And to that extent, we have to start having honest conversations with our bank, with the banks that we supervise. Again, we touch 78% of every bank in America, making sure that they understand what they need to do. They have an obligation to mitigate their risk. We've given them tools to better understand that, and to understand that, at least from the perspective of state regulators, there's no taboo categories. You're entitled to bank any lawful business that you want to bank. Understand the risk of doing that, use the tools that we've given you, and hopefully that is a pathway that state regulators can use to attack this de-risking phenomenon.
Thank you for that testimony. My last question would be to you, Mr. Oxman. Operation Choke Point may be one of the most abusive government overreaches in our nation's history. As a business owner myself for almost 50 years, it's unconscionable that a federal agency could so recklessly affect the livelihoods of so many law-abiding citizens and businesses. So how do we prevent future overreach from the executive branch, and should the roles of the agency and of Congress be in that prevention?
I think, Congressman, you're absolutely right in characterizing this overreach as harmful to our economy. It's harmful to American business. And our concern going forward is we saw Operation Choke Point come up during the prior administration, but as you noted, there is a risk going forward next year, 5 years from now, 10 years from now, that agencies will start this back up again. So I think the proper role of Congress is to pass legislation like we've talked about today, H.R. 2706. Make sure federal agencies, federal law enforcement understand that Operation Choke Point is not the law of the land, and they are not to act as policymakers. It's Congress's decision what merchant activities are legal and what aren't, and regulators and law enforcement should not be using Operation Choke Point as a policymaking activity. It's wrong, and Congress needs to stop it.
Thank you for your testimony.
Gentleman's time has expired. With that, we go to the gentleman from Florida. Mr. Ross is recognized for 5 minutes.
Thank you, Chairman, and I appreciate this hearing. I think the Operation Choke Point has to be one of the most self-serving, corrupt abuses of power that this country has ever exercised. And unfortunately, the small businesses, the mom and pops that have been impacted by it, it sets a very bad precedent. Mr. Oxman, I'm hopeful that we don't see it again and that we do pass legislation to make sure it never happens again. Mr. Baxter, your particular industry is unique. As the rest of the world seems to want to go cashless, you supply a much-needed basis, cash, to markets where it's hard to find cash. You have your ATMs throughout rural areas. Could you describe what has been your experience in dealing with banks in areas where you have consumer bases that desperately need your services?
It's of recent, of the past year, it's been not been good at all. As
I mean, you've had technological advances that you've had to keep pace with, which you've been able to do. And yet you serve a market need that nobody else will service.
Correct.
And for some reason, you've got banks that now won't allow you, a legitimate ATM provider, to be able to have bank accounts. Why?
I wish I could answer the why, because we've received the letters and we've asked why, but we've received no response. What it has done to us is this. It's forced us to go to other alternative banks, which has created
greater risk.
A greater risk for us, and here's the greater risk. The greater risk is what used to be, for example, with Wells Fargo, as one example. Many branches throughout the country, even in some closer to some of the rural areas that we service. So rather than having to go pick up 2 days' worth of cash and haul it around in a vehicle, and the danger in doing that, we could pick up a half a day's worth of cash and then go to another branch and pick up another day's half of cash to get that cash out, but yet keep ourselves safe and everyone else around us safe. Those are the problems that we now face. We're now having to pick up cash in larger amounts.
And they're all hiding, I guess they're hiding their reasons. The regulators are hiding their reasons on the basis of anti-money laundering statutes. Now, you've been in this business for quite some time.
Yes, sir.
I mean, you've made a career off of it. You've employed a lot of people off of it. And more importantly, you've catered to a market that desperately needs your services out there that most banks and other financial institutions just won't service for cost purposes alone. Are you aware of any instances of violations of the anti-money laundering laws dealing with the independent ATM owners?
I absolutely am not.
And so that excuse in and of itself, it just doesn't shed light. So what else could it be? Do you have protocols in place to make sure that you don't have money laundering operations going on?
Correct.
And have you shared these with bank regulators?
We've not had the opportunity.
Because they won't allow it, will they?
That's exactly why the National ATM Council would like to ask the OCC and banks and regulators to join with us in a group conversation. Let us share with you what we do, and you share with us what are your concerns. Our books are open. You can examine us, and we are auditable from top to bottom.
Yeah, clearly. But more importantly, you are more than willing to work with the regulators to make sure that you are not only in compliance with the laws, but that you also have access to banking services so that your consumers, your customers that are desperately needed, desperately need your services can do so at an affordable price and an accessible opportunity.
Correct.
Mr. Schneider, I'm one of the strongest proponents of state regulations. I mean, I'm a strong proponent of our insurance regulation system and, of course, our state banking system. You have developed a tool called the Bank Secrecy Act Self-Assessment Tool for money services businesses. Can you describe, real briefly, how it's helping with de-risking?
Well, our thought is that, again, it's a tool, not just a rule. So it's a tool that banks and non-banks can use to understand their own individual BSA AML risk. And once you understand your own risk profile, then you can take the appropriate steps to mitigate it. And that's how we think businesses should handle their risk. It doesn't rely on broad categories.
Our federal regulators aren't subscribing to that particular model,
this is something that we've take pride in developing at the state level, and hopefully our federal regulators will recognize it for its value.
And have a chance to replicate it.
Yes.
Thank you. I yield back.
Gentleman yields back. With that, we go to the gentleman from Colorado, Mr. Tipton. He's recognized for 5 minutes.
Thank you, Mr. Chairman. Thank the panel for taking the time to be able to be here. We've had some conversation in terms of access, actually, to banking, access to capital issues. And Mr. Oxman, I come from a rural part of Colorado, the area that I represent. And a number of our folks now are starting to participate in the electronic payments industry and rural people. They've sometimes been seen as underserved, and because of the physical distance, basically, that they have from an actual brick and mortar institution. Can you maybe briefly touch upon how de-risking will threaten access to choices for rural customers,
and whether or not de-risking has been detrimental to their financial opportunities.
Thank you, Congressman. It is an exciting time in our industry, and fintech products and services are really opening up access opportunities for those, particularly in rural areas like Colorado. These are people, as you noted, who don't necessarily have access to a bank branch. They don't necessarily have access to as many retail options as they might like, but they all have smartphones, and they can use those devices, which are safe, secure, and reliable, and other fintech products and services to access electronic payment systems. E-commerce is a great opportunity for them, for example. It doesn't matter if you're in a rural area or in an urban area. With e-commerce, you can reach the whole world and sell your products and services that way. Those are the type of fintech innovations that our industry, that ETA members are deploying every day. And the problem with de-risking is it says regulators are going to be paying close attention to fintech products and services. You might want to consider not deploying them or not offering them because, well, maybe Operation Choke Point type regulatory environment prevents that type of innovation from happening. That's what we don't want to see. What we want to see is these new fintech products and services bringing more merchants, bringing more consumers onto electronic payments rather than fewer, and that creates exactly the kind of opportunity that you're talking about. And that's what's most exciting about the opportunity of fintech, and regulation, law enforcement activities like Operation Choke Point prevent that from happening.
Great, thank you, I appreciate that. Ms. Snyder, I wanted to be able to visit with you a little bit and follow up on some of the comments that you'd made in your testimony about what happens to the demand for money service businesses if these businesses are denied access to capital and the banking services. Where do these customers actually turn to if they are denied that access to the financial system because of the effects of de-risking?
I think that's one of, again, has been touched on before, it's one of the ironies. We'll lose visibility into where they're going because they're going to be going into just this pure unregulated cash system where we have no oversight into what they're doing. In some cases, of course, they're going to be deprived of any service because everyone's been run out of the communities in which they're living. And we just view that as the worst possible outcome, particularly if it's the product of non-thoughtful risk mitigation strategies. If it's just you think you can't bank these customers because they're inherently risky, we're going to lose track of what they are doing, and in many cases they just won't be served.
So that's kind of an interesting paradox, isn't it? That we're saying we want to be able to have the regulatory ability to be able to track dollars, to be able to make sure that things are safe, but at the same time we're driving people into those gray market areas. What's the safety level if people do move into that?
Yeah, that's a great risk. Again, when you're moving vast quantities of cash around, just the physical safety of the people that are doing that and the customers that are receiving that service is of great concern to us as state regulators.
Do you have some ideas maybe you'd like to be able to share on what further things Congress can do to be able to address de-risking?
Well, I do think, again, sort of getting the attention of our federal counterparts that they need to be more individual. They need to make sure that institutions individuate their risk, their reputation risk, their BSA, AML risk, that they pay close attention to individuated risk and not these broad categories of risk. And that, quite frankly, they learn to better understand what us as state regulators are doing with respect to making sure these businesses, these non-depository institutions, are meeting their BSA AML obligations, and perhaps that can give them some comfort to not be quite so reactionary to certain types of business categories.
Great, appreciate did anyone else want to weigh in on that?
I think to answer your question, they need to tell Mr. Baxter why they're closing his account, not just give you an 800 number and leave it there. Mm-hmm. I mean, the problem is that there is no transparency and accountability in the process, and as long as you don't have that process in place, simply giving the right of rebuttal to a money service business to provide evidence that they are doing actually right, they're actually preventing risk, the problem will continue. And there is a serious problem. There are consequences happening across, not just in the United States, but it's a global pattern where businesses are actually suffering dramatically and people are being affected by it.
Right, and unfortunately part of the problem has been caused by the regulators. So with that, Mr. Chairman, I yield back.
Gentleman yields back. With that, we go to the gentleman from Kentucky, Mr. Barr, recognized for 5 minutes.
Well, thank you, Mr. Chairman. And first and foremost, let me just applaud you and commend you for your consistent focus and attention to the issue of de-risking and Operation Choke Point. As long as I've been on this committee, you've been laser focused on addressing this problem. And it is a problem. It affects Kentucky, legitimate businesses losing access to financial services and banking services, and that's a real problem. I'd like to start with Mr. Schneider. I appreciate your common sense, measured, thoughtful approach to this issue. We have a regulator in Kentucky, Charles Weiss, Commissioner Weiss, who has a similar thoughtful approach to this issue. And for both of you and other state regulators, my question is, how well are you coordinating, how effectively are you coordinating or not coordinating, as the case may be, with federal regulators? Is there how significant is the gap in the approach to this issue?
Thank you very much. I'll also see Mr. Weiss in a couple of weeks, so we'll give him your best. I think we as state regulators are doing an increasingly better job of working together. We did, for the big MSBs last year alone, we did 63 joint exams. So that's reducing the regulatory burden for them. The more we as states work together and come in and do something once, as opposed to doing it 50 times, the less burdensome it is for the companies that we regulate. Generally speaking, we do have good, relationships. We work as cooperatively as we can with our federal partners. But there are some gaps, and again, I don't mean to keep harping on HR 3626, but that small change that would allow us on these new types of innovative companies to be able to share exam findings, participate in joint exams with federal regulators, as seemingly simple as that is, would not only reduce regulatory burden, but I think make our federal counterparts more aware of what we're doing. So that they don't have to think they need to do it again because they don't know what we're doing in the first place.
Well, speaking of these innovative companies and fintech, from a regulator's point of view, and also Mr. Oxman from your industry's point of view, can you all give us some concrete examples of some fintech companies, some innovative entrepreneurial companies that are helping combat fraud? Without identifying particular companies, just what are some of the ways in which fintech companies are helping combat fraud or money laundering or other kinds of nefarious activities?
Well, I can just start by saying, as part of the licensing process for our money service business companies, having a good BSA AML compliance plan is required. That's a required checkpoint to even get licensed by one of our states. So. We see them being very thoughtful. They don't just approach this. I don't think any of them necessarily contend they have a magic bullet or a secret sauce. It's just good understanding of the regulations, working with their state regulator to make sure we agree that their plan works, and then going forward and providing services.
And I think in the fintech space, Congressman, one of the most interesting areas is the so-called peer-to-peer services, where consumers are sending money back and forth to each other electronically. Some of the biggest names in technology are deploying peer-to-peer services, and they're deploying them with those built-in BSA, AML type protections that you, as a Committee of Jurisdiction, want to see them deploying. They're newfangled services. They use smartphones instead of the checks that we used to write to each other, but they're offering those protections. And as we've been talking about today, we should look for more opportunities to bring consumers, bring merchants onto these electronic payment systems, because it's a lot easier to provide those fraud protections in the electronic world than it is in the offline world.
And for regulators that don't have this open mind about innovation and get a little bit overzealous with respect to de-risking, there's an opportunity to actually undermine the safety of the financial system. Is that fair to say?
That's absolutely true. That's the worst part of Operation Choke Point, is it has that perverse effect of kicking people off of the very systems that are deploying these kind of fraud prevention prevention tools and preventing that fraud analysis from taking place. We're seeing some good signs. For example, the OCC has this fintech charter idea that we support that will help, again, bring these new fintech players onto the financial system so we can deploy these fraud algorithms and prevent fraud from taking place. Illinois and 7 other state commissions have joined together on a joint effort to streamline the money transmitter evaluation process for licensing. That's a great move by some very forward-thinking regulators, again, designed to help bring these fintech companies into the financial system, onto electronic payment systems, so we can prevent the kind of fraud that we want.
Sure. Could I just, there's a lot of talk about the FinTech Charter, I know, and probably subject of many more hearings, separate hearings. The only thing I'd like to caution there is help people keep in mind, is creating another big federal bureaucracy as a chartering authority the direction we want to go here. States are already doing this work. We've got a proven track record of keeping consumers safe, proven track record of supporting innovation, and I'm not sure it makes a lot of sense to create a new federal bureaucracy which could cause the problems that the current one seems to have created.
Thank you. My time has expired.
Gentleman's time has expired, and we are out of witnesses, but I do have a couple of follow-up comments and questions here. For the record, in a question, Mr. Rothfuss indicated that pawnbrokers were included on the FDIC high-risk list. Let the hearing record reflect that the pawnbrokers were not included on that list. With regards to a comment Mr. Ellison made, I would like to clarify that he made something to the effect that he didn't see any coordination or any sort of personal inclinations of the DOJ and FDIC folks with regards to Operation Choke Point. I would just point out that there are oversight committee reports on both FDIC and DOJ showing personal motives with documented emails between individuals in those agencies that there were personal motives and there were personal actions taken as a result of that. Mr. Oxman, as a result of, I really enjoyed your one comment where you said the risk is based on the industry or business and not the product sold. I thought that was spot on. I appreciate that. I'm going to use that. I'm going to swipe that from you to use in for some of my other discussions sometimes. But there was Mr. Barr kind of hit on a little bit of it here, and I was kind of wanting to follow up a little bit. And you made the comment a minute ago that there's the FinTech folks and the EFT folks, electronic transfer folks, are working on different products and better ways to protect information and money transfers. These technologies are going to have, they're going to be implemented, and they're going to ask the retailers to participate, whether it's biometrics or whatever else is out there. So whenever a credit card, debit card, or whatever type of payment is used, and in order to do this, they're going to have changed the way they do business as well. Is that right?
That's absolutely right, Mr. Chairman.
So my question, I guess, is, because we had a hearing yesterday with regards to the liability situation, with regards to how this is all taking place between the retailers, third parties, banks, what have you, and seems to fit right in there with regards to, as you technologically continue to advance, and these things are basically forced onto the businesses, they're going to have to change the way they do business as well. Is that correct?
That's absolutely right, Mr. Chairman, and it does go back to that principle that our industry is, in the first instance, under both federal law and card network rules, we're responsible financially for fraud. Consumers have 100% liability protection against fraudulent activity on their credit cards. So we have a powerful incentive to deploy exactly the type of new technology tools that you're talking about. Whether it's biometrics like the fingerprint or Face ID, we're moving away from old types of validation, authentication like the signature, which we're getting out of the system. These new technology tools are exactly what the private sector should be deploying. We want to deploy them, and we're well positioned to protect against fraud with them.
Mr. Snyder, you made a couple of great comments with regards to the environment and how it needs to be changed. You, as someone who is the head of a regulatory agency, I had this discussion, quite frankly, with the top regulators, and have told them they have a culture within their agency that's got to be changed. Here we have Operation Choke Points has been discussed, and it's morphed into something more than just the list that was on the FDIC. Now it takes into account ATM machines, electronic transfer folks. And it's kind of ironic because here we are talking about shutting down systems that provide cash, the ability of people to get cash from their accounts, as well as be able to transfer money electronically out of their accounts. How are they supposed to access their accounts? how are they supposed to access their accounts if they can't get cash or they can't get the money transferred? What's left? I'm at a loss.
I think that just highlights this great irony that overzealous regulation can actually have the exact opposite effect as pushing people into areas where we have no visibility into what they're doing and less compliance.
So I guess, how do you change the culture to agency? I mean, we've got, a bill to stop Operation Choke Point. We've had hearings here to try to expose this. We're trying to work with the different regulators. And I don't want to put words in your mouth here, but it seemed to me that we need to just continue to have meetings with not ourselves, but with your groups, with the regulators to say, look, we've got to coordinate. This is still going on. They're still at the bottom. And I've quite frankly, I've actually told some of the regulators, I said, this culture is all the way down to the bottom, and you're going to have to go all the way down to the bottom to change this.
I absolutely think so. We certainly learn a lot from our federal counterparts on certain issues. I think they've got a lot that they could learn from us, and the more we collaborate and the more we cooperate is a way of starting to change that culture.
We actually are at the end of our hearing here, and we've got a couple minutes because I know we're going back into a session here shortly. But I'd be willing to let each one of you have like a couple minutes just to close if you've got an opening, if you'd like to answer a question that didn't get enough time to, or just make it brief. We don't want 5 minutes.
Absolutely. I would just like to thank the committee for listening to us, for getting better understanding of what state regulators do, the information that we're providing about this topic through our call report, the degree to which we're trying to make regulation more efficient and more effective. Appreciate you listening to us and for helping us where the law needs to be changed a little bit to work better with our federal counterparts.
Mr. Baxter, you got a couple comments?
I'd like to thank the committee for holding these hearings today and for giving us an opportunity to express what it is that the National ATM Council and the ATM industry, private sector as a whole, would like to move forward with in regards to working with the OCC, the regulators, and anyone else that the government thinks is necessary for our industry to be able to survive, thrive, and move forward, supply cash to America.
Very good. Mr. Oxman, any
Thank you,
closing
Mr.
comments?
Chairman, and thank you for the opportunity on behalf of the Electronic Transactions Association to be here today. Our members are actively deploying fintech products and services to prevent fraud and, more importantly, to enable commerce in this country, to enable merchants and consumers to continue to drive our economy with retail purchases. And we appreciate the opportunity to explore how a regulatory environment can be better conducive to the deployment of the type of fintech products and services that prevent fraud and enable commerce in this country. Thank you.
Dr. Orozco?
Thank you very much. I think the main issue is to redirect the attention from de-risking into risk prevention. And the instruments exist to do that. And in that line, there are different methods to continue enforcing the law without sacrificing financial access for businesses or individuals. Thank you.
I'd like to thank the witnesses for your testimony today. You've been great. A lot of great comments, and appreciate your frankness. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask each witness to please promptly respond if you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. With that, this hearing is adjourned.